So China's winning the commodity war and the world isn't prepared for what comes next. And this is the real battle that no one is talking about. Back in 2021, we had a shocking statement from the Middle East. Saudi oil giant Aramco announced that supplying China with energy is their top priority for the next 50 years. And just imagine having your energy supply secured for the next half of a century. This is a powerful fact that we just can't ignore. And a few months later, we had another report that China is hoarding half of the world's grain supplies, pushing up global food prices. And according to data from the USDA, China is expected to already control the majority of food reserves. We are talking about 69% of corn and 51% of wheat stockpiles. But why is China hoarding so much food, energy, and commodities? Why are they buying everything from oil and gas to copper and gold? Is because China is in a race to become a global superpower. They are moving away from just being a regional giant and they want to compete with the United States. And in order to do that, China has to build a strong economy and secure the inputs they need to grow. And these are your commodities, vital resources that every country needs to grow. It doesn't matter if you're a developed economy or emerging market, you need a ton of commodities just to survive. And let's understand the amount of pressure China is facing from the West. Over the past few years, the US has slapped multiple tax sanctions on China, hoping to curtail its growth. But guess what? It's not really working. Chinese firms are still moving forward to advance without the latest chips from the Western countries. And there's a reason why the local Chinese people are buying into tech firms in China. Lots of money is pouring to the sector, and it's not really about patriotism as the headlines say. It's because China has secured their vital lifeline of commodities. To make microchips, you need tons of commodities, including rare earth production. Now, China controls the rare earths market. In 2021, they had control of 61% of global production compared to the US 16% share. And that's why China will survive and outlast any tax sanctions. They have the resources necessary to keep experimenting and innovating ahead. And we have to understand that the real economic battle here is the rush for commodities, and it is a battle that China is winning. And in this video, you'll understand the moves Beijing is making to control the world's supply of natural resources. They are essentially following the playbook that made the United States a global power today. And this is only accelerating because the US, they have made a ton of strategic errors over the past 12 months. And consider this one fact, China has over 1.4 billion people in it. And that is on par with India and almost 5 times the population of the United States. So just imagine the amount of resources you need for such a large populace. China's resource challenge is more complex than the US or any Western nation simply due to its sheer size. But that's just the tip of the iceberg. China's main economic power comes from its industry. Their manufacturing engine is why they are the world's second biggest economy and is expected to surpass the United States very soon. There are even estimates that say this could come as early as 2028, and that, my friends, is just 5 years away. According to the IMF, China is projected to grow by 5.3% versus the United States, which will only experience a 1.6% growth. And if this continues, if this trend continues, 2028 is well within reason. And to maintain this dominance and growth, China has to protect their industries. And this means securing all their manufacturing inputs, especially when it comes to energy. Now, if China doesn't have access to huge amounts of energy, their economy will literally crash. And I want us to use Germany as the perfect example of how important energy is, especially for manufacturing giants. And this is the main reason why the German economy has crashed into a recession. Last year, Credit Suisse published a very important chart on how dependent Germany was on cheap energy. We can see that $2 trillion of manufacturing value added was tied to only 20 billion of Russian gas. That is 100 times leverage, which is insane. And this tells us how important having cheap energy really is. And once Germany cut themselves away from Russia, their energy costs skyrocketed. We can see the big difference in electricity costs between Germany and the rest of the G7 nations. Just for electricity prices alone, Germany was paying up to 3 times more. Now, the German economic machine collapsed because they couldn't secure cheap oil and gas, and the same collapse can happen to any manufacturing power. Now, just in 2021, China accounts for 30% of global manufacturing output, and that is tangible economic power. And to stay number one as the world's factory, the Chinese are moving quick. They are on a mission to secure their energy supply. And that's why we are seeing incredible long-term deals like the 27-year LNG supply China signed with Qatar back in 2022. That is a lot of gas. President Xi is not leaving anything to chance because the absolute worst things that can happen to China is commodity sanctions. And there's one big miscalculation the United States made that we really need to talk about. This is the single biggest reason why China is winning the war for commodities, and that is creating the conditions for China and Russia to unite together. And we know by now that China and Russia have a no limits partnership. They are essentially functioning as one economic bloc. Russia supplies China with a ton of commodities, while China supplies Russia with essentially everything else. In fact, during President Xi's trip to Moscow, he told Putin something that sent shockwaves throughout the globe. Just before he left for Beijing, Xi shook hands with Putin saying, "Change that hasn't happened in 100 years is coming, and we are driving this change together." And it's quite obvious what they mean, right? Either they want to end Western dominance or take down the US dollar, maybe even both. But here's the irony: Russia actually wanted to join NATO multiple times in history. In 1991, as the Soviet Union collapsed, Russian President Boris Yeltsin expressed interest in joining NATO. Then in 2000, Putin himself also wanted to join. He told the BBC, "Why not? I do not rule out such a possibility. Russia is part of European culture, and I do not consider my own country in isolation from Europe." And if the West really wanted to contain China, they should have taken steps to integrate Russia into the fold. But instead, the West treated Russia as a gas station, while China is treating them as an ally. A key distinction here. This is where China absolutely gets a windfall. Their energy imports from Russia alone has skyrocketed and is only gonna grow. Just look at how much oil China is importing from Putin. They have gone from an average of 1.6 million barrels a month over the years to over 2.2 million barrels in March 2023. And that is an increase of almost 40%. Russia is exporting so much oil that they are neck to neck with Saudi Arabia as China's top supplier. We can see Russia's monthly exports actually surpassing the kingdom in early 2023. China's gobbling up tons of oil from both nations, but they are favoring Russian crude because the discounts is just so lucrative. Remember the example with Germany earlier? The higher your crude prices, the more your industries will suffer. Conversely, cheaper oil means fatter margins for your factories. And according to calculations from Reuters, just a $10 per barrel discount translates into $5.5 billion in savings for Chinese refiners. Thanks to the sanctions and oil price caps, Europe's loss is China's gain. However, buying commodities isn't enough. China can import lots of food and oil and gas, but it is still reliant on the supply chains of others. And that's why America is so powerful today. They are self-sufficient when it comes to oil. In fact, check out this shocking title by CNN themselves. It alleges that the war in Iraq was fought for big oil. Now, whether that's true or not, it just shows us how important oil is. And according to the EIA, China is one of the top oil producing countries, but it comes in at only 5%. That is 4 times less than the United States' 20%. And that is a big vulnerability that China is moving to cover. And this is why we keep saying that the real battle is being fought over commodities, right? 100 banks can collapse tomorrow, but as long as there's still food and energy, society will continue to function. You'll find a way to recover from a banking collapse. But if you take food and fuel away, we'll have a total disaster on our hands. So in order to secure their economy, China is moving to control the supply side. We have to understand this. They are investing heavily in the production of commodities outside of the country. The keyword, outside of the country. And let's focus on China's investments in Brazil, a commodity giant in the BRICS bloc. From 2007 to 2020, China has pumped over $66 billion into Brazil as foreign investment. But if we look closer into the details, we can see where the money is actually going. In 2019, 38% of Chinese investments went into mining and oil extraction, while over 50% went into electricity and water. Almost 90%, guys, is going to developing commodities. And it's very obvious what China is trying to do, right? They are buying into the production of energy itself. Because if you control the production, you secure the supply of energy, you essentially can become your biggest customer. This is another reason why Saudi Aramco's refinery deal with China is just so important. China is securing energy supply directly to their country and becoming a producer of oil products, so it's a double win for them. On the supply side, Aramco will be providing China with 690,000 barrels a day of crude oil, and that is more energy flowing into the country now. And once the oil gets refined, who do you think will have the buyer's advantage? It will be China. After all, the refinery is on their own soil. China can choose to either buy up the products like gasoline and diesel, or they can choose to export it to the rest of the world. So while the West is busy friendshoring to places like South Korea and Japan, China is quietly shifting the production of commodities directly to their motherland. Now, buying commodities is important. China needs them to grow their economy. But what's not immediately obvious is how they are using it to challenge the US dollar's hegemony. Remember the enormous advantage the United States has when it comes to the commodity markets. Even in Asia and the rest of the world, over 70% of global trade is conducted in US dollars, and this includes the majority of commodities. They are all priced in the reserve currency. And this is what China is trying to break using the power of commodities. And to understand this better, we need to talk about the gold market for a bit. The majority of the world's gold is traded on Western exchanges. We are talking about the local London market and the COMEX that dominates over 80% of global trading volumes of gold. Now, China, in contrast, only controls 12% of global volumes through the Shanghai Futures and Gold Exchange. And it should come as no surprise that in London, in New York, gold is priced in dollars, but in China, it is a totally different story. Gold in the Shanghai Exchange is priced in the Chinese yuan away from the US dollar. The gold is priced in yuan per gram, and you can take physical delivery in a vault located in China. So I hope you can see the grand plan for this big commodity rush. Now, the main objective is to grow China's economy, of course, but at the same time, they are trying to gather critical mass so that they can buy and sell commodities to the world outside of the dollar. Now, gold is just a start. More countries are embracing trade with China in yuan because they have a lot of buying power. And this is happening even in Western nations and their allies. In 2022, the Australian iron ore supplier BHP embraced yuan settlement for their exports. China actually paid Australia Chinese yuan for iron ore, and this is amid all the tensions and saber rattling between the two countries. And according to BNP Paribas, the world's largest commodity exporters and importers, China, Russia, and Brazil, are now working together on using renminbi for cross-border payments. That is the Chinese yuan. But here's the important part. Their cooperation could draw other countries to yuan payments over time. And this is what we call critical mass or the network effect. If big commodity producers choose to price their exports away from the dollar, and if prices are attractive enough, buyers will buy. And that's why the real economic war, the real de-dollarization campaign, is being fought in the commodity markets. So what does this mean for you and me? Well, we can track the rate of de-dollarization from China's commodity rush. The more investments they make to increase their supply of commodities, the more bargaining power they have with the rest of the world. They can dictate terms and bargain for trade outside of the dollar, right? Now, secondly, China's economy is becoming sanction-proof, and this is very important going forward. BNP has a really interesting chart that shows us the number of new US sanctions per year. Just in 2022 alone, Biden has imposed more sanctions than Trump, Obama, or Bush in a single year. If we can expect this state of affairs to continue, the sanctions won't be ending anytime soon, but the effects will get more diluted as time goes by. New sanctions likely will backfire without really hurting China. Let's take the tax sanctions for example again. As long as China has a steady stream of commodities coming in, they can outlast the punishments from the United States. And that's why we are seeing a shift in the winds. China is now banning chips from US company Micron Technology. It is such a big deal that America is calling it economic coercion and won't tolerate the ban. But this calls into question why China is actually doing this. Most likely, they realize that they can innovate ahead without US chips. As long as they have the commodity inputs, their industries will survive. So welcome to the end of globalization. The chaos is only going to accelerate and we're going to hang tight in this brave new world. But let me know what you think in the comments below. How important is China's rush for commodities and how will the United States respond to this? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.